I often get asked, what are some of the best indicators to have on your chart for trading? Or what are the most important indicators to look at when you're deciding, to buy or sell a stock? What's interesting is talking to other traders, it seems like the RSI is the one that causes the biggest grief for traders. For whatever reason, it seems like it's the most misunderstood or the most misinterpreted indicator out there. So in this video, I'm going to go over what the RSI is, some of the common mistakes that people make with the RSI, and then what the correct way to use that indicator is. So stick around after the intro, and hopefully this video will help you improve your trading. All right, well, let's get right into it. So let's start off with, what is the RSI? If you look up the definition of the Relative Strength Index, you'll most likely find something similar to this. The RSI is a momentum indicator used in technical analysis. RSI measures the speed and magnitude of a stock's recent price changes in order to evaluate overbought and oversold conditions. And that's 100% correct. I think where the issue is in the way that people interpret what does overbought and oversold mean. So I think the easiest way to go over this is, let's look at some charts with some real examples, and we'll look at how the RSI responds to price movements. So this is a chart of US Steel, ticker symbol X. I'll expand the RSI so we can see what's going on as the price moves. And what I want to do is first look at this area over here. So this was after a period of consolidation and a breakout above a resistance line. And as you can see, is right on that breakout, the RSI was already in the overbought condition. So a common mistake that traders make is they think that once a stock is overbought, that it's about to reverse. So once a stock becomes overbought, they'll either sell their stock or, worse yet, consider shorting the stock. Now, when people set up their RSI indicator, typically they use either 30 and 70 is probably the most common, or some people use 20 and 80 as the overbought and oversold conditions. So you can see that if you're using 30 and 70, right on this breakout, this is already overbought. But if you were to short this or sell your stock here, you would have missed out on this huge rally. I mean, this stock, if you bought it here on this breakout, you would have been up about 47% in only 20 trading days. So that's a pretty good gain. And when you look at this RSI, one thing you should really notice is that when a stock becomes overbought, it can stay overbought for a long period of time. In this case, the stock became overbought on February 25th and pretty much stayed in that condition until March 28th. So really the way you should be looking at an RSI indicator is it tells you what the strength or the momentum in the stock is. So if a stock is overbought, that's actually a good thing. Stocks that are overbought and stay overbought can give some really good profits. So the way you should be trading something like this, and the way a lot of traders do trade them, is they'll actually buy a stock once it becomes overbought, which seems very counterintuitive. But when you look at this chart, it would have worked perfectly in this example. So now let's look at the flip side of it. When a stock is moving down, we'll see the exact same condition on the oversold side. So on this chart, X became oversold on April 26th. And you'll see that's this candle right here. This was after only a very small move down from its highs. If you took this signal, this oversold signal, as a reversal and went long, you would have instantly been stopped out. And you can see the large drop that this stock made after getting into this oversold category. And again, it stayed oversold for a long period of time, from April 26th all the way to May 23rd. And then after a short pause of sideways consolidation, it went right straight back into the oversold condition, again from June 9th all the way to July 7th. So I hope what you see in this is that really you shouldn't be using the RSI as a way to predict when a stock is going to reverse, but you should be using the RSI to see the momentum of a stock and which direction that momentum is in, and basically to follow that momentum. Now there's one other way to use the RSI indicator there is a method where you can actually use it to predict when a stock is going to reverse. To show you that, let's go over to a different chart. Let's bring up the US dollar, so ticker DXY. All right, so here we're looking at a 10-minute chart of DXY. Now this just happens to be where I found this particular example, but you can see this pattern developing on any time frame. So it doesn't matter if it's a 10-minute, hourly chart, daily, weekly, the pattern works the same. So what we're looking at is a stock that's in an uptrend. So you can see DXY was in a strong uptrend for several days or several weeks. And then as that uptrend continues to move, well, let's look at the RSI over here first. So during the uptrend, you can pretty much draw a line. It's pretty much a flat line of where the RSI indicator comes up to each time the stock becomes overbought. Well, what happens is as the rally continues, you'll start to notice that the RSI doesn't really follow the price anymore. So if you look at this section here, this is right at the end of a long rally. If you look at the RSI, it's actually making lower highs while the stock is continuing to make higher highs. So when you notice a pattern like this, and actually not to confuse things, but if we look at the MACD, it actually makes the exact same pattern of lower highs while the stock is making higher highs. So, but back to the RSI, when you see something like this in the RSI, where price is moving up, but the RSI is moving down, that's telling you that you're probably close to the end of a rally. So this is how you would use the RSI to try and find stocks that are about to reverse. And you can use this method both for stocks that are uptrending and downtrending. So in this example, the stock is moving up, and this is what we call a bearish divergence in the RSI. So basically it's one bearish signal that the stock might be reaching its peak. You can use this also for stocks that are going down if the RSI starts making higher lows. That would be a bullish divergence for the RSI. Now the thing with using this method is that there's no way to know when the stock is actually going to reverse. All this is telling you is that the momentum is really starting to fade away, but the price is continuing higher, which means there are less and less actual buyers pushing the stock up. So it's just a warning condition. It's just a heads up that, look, the peak is somewhere around the corner. So when you see this, it's not an automatic signal to sell or short the stock. Rather, if you are long in the stock and you see an RSI doing something like this, you just want to get a little more protective. Maybe you want to take some partial profits. Maybe you want to tighten up your stops a little bit, but there's no need to just get out of the position completely. Similarly, you wouldn't want to use something like this on its own to short the stock. You would want to wait for some other kind of indicator. For example, you'd want to use the price. You'd want to look at what the key levels of support are, and say on a day like right here, where it breaks a key level of support after a bearish divergence in the RSI, that would be an opportunity to get short in the stock. All right, let's look at one more example. So this is a daily chart now of the the Grayscale Bitcoin Trust, GBTC. And so I just wanted to show you that this works on any time frame. So last chart was on a 10-minute chart we were looking at. This one's on a daily. So this was back in 2021, I guess February of 2021, right when Bitcoin was reaching its peak. So what you can see here is during this monster rally up, again, you can pretty much draw a straight line right about there. So every time Bitcoin peaked in its RSI, it was always right around the same point. Then what you'd notice is that this higher high, so this high is higher than this one, but this RSI level is lower than the previous one. So again, that would be a warning flag that something isn't quite right. The momentum is starting to fade a little bit as the price is going up, again, indicating that there may not be quite as many buyers as there used to be anymore. And let's look at just one last final example. So this is Tesla, ticker TSLA. So again, here we want to look at, the stock was consolidating sideways and then started to move down. So once it started to move down, you can see it became oversold. And this would have been a perfect entry to short the stock. So when you see the RSI first go either overbought or oversold, it's usually a good entry to follow that momentum in the direction that you see it in. Similarly, if we go back just a little bit to this part of the chart, we can see the exact same thing happened on the uptrend. When the RSI went overbought, that was actually a good time to buy the stock and ride this rally up. So I guess the point I was trying to make in this video is that, the most common mistake that people make with RSI is they think that if something's overbought or oversold, it's going to instantly reverse. And that's really not the case. When you see something overbought or oversold, especially if you catch it right when it first enters that area, that's actually a good time to buy or short the stock, in the direction that the RSI is moving in. However, if you want to use the RSI to try and predict a stock reversal, then you want to look for either a bearish divergence or a bullish divergence between the stock price and the RSI peaks. So you want to look at, if the stock's moving up and making higher highs, you want to look for when the RSI starts making lower highs to indicate that you might be nearing a top. The reverse of that, if a stock is making lower lows and you start to see the RSI making higher lows, that could indicate a potential bottom, and you might want to consider going long in the stock. So I hope that helps. Hopefully that clears things up a little bit on how to use the RSI or how to interpret the RSI. If you have any comments or questions, you can post those down in the comments section. And please hit the like and subscribe buttons, and we'll see you next time.